It seems like at least some bit of a rural recovery is what we could say from the commentary. But first, let me take you through how the numbers were looking like versus each other in terms of the updates so far. Dabur was the first one to come out with the update. When you look at it, it was a weakish update that came in from Dabur, mainly because analysts said that there was a bit of miss in terms of the expectation they had in terms of margin expansion. They were expecting a better margin expansion, but yes, still nonetheless they saw a margin expansion, mid-single digit growth, as well as in terms of volumes, it's around a low single digit growth that one is anticipating for Dabur. So yes, that's how Dabur looked like. Mariko was in line. We saw a bit of a run-up coming in the stock once the Q4 update announcement was made. Revenues, low single digit growth, while in terms of volume growth, they are seeing a sequential uptick in terms of volume growth. Q3 was 2% to 3% volume growth. So this time maybe a sequential update up. So yes, we could expect a bit more in terms of better volume growth of more than 2-3% for at least Mariko. Let's move on. GCPL is the best in terms of performance that we've seen so far. Mid-single digit volume growth, high single digit volume growth, mid-single digit revenue growth. Margin expansion continues. And in terms of when we look at the commentaries that have come in from Mariko and GCPL, so Dabur as well as in terms of Mariko, when you compare, both of them have said that there's a gap that was there in terms of growth for rural and urban that has been narrowing. Also seems like rural is at least starting to see a pickup. Narrowing of gap in rural urban was the key factor. GCPL said that the demand environment still remains subdued, but interesting to watch out for. You know what is interesting that we should keep an eye out on is palm oil prices have started seeing an increase. So will that margin expansion continue for all these companies going forward is something key to watch out for in terms of commentary from their Q4 results once we wait out for that. Moving on to the jewelry retailers, Titan as well as Kalyan have come out with their update. Kalyan continues to outperform Titan in terms of the updates that we've seen in terms of growth. Kalyan 34% growth, better than what everyone was expecting. That strong growth has continued there, while Titan is in line. They have been reporting this 18-19%, around those, below this 20%, slightly below the mark over there. So Titan also 17% growth, in line with what the street was expecting. Lastly, Nykaa, in terms of the update that has come in, a good update, a decent update, no positive surprise, but at least a good growth that has continued in for the company, whether you look at it in terms of the BPC segment or the fashion industry, fashion segment, they managed to see a good growth there. And you can see consolidated gross merchandise value expected to see a growth of around 30%, more than around those early 30s is what we could expect, while in terms of revenue growth in the high 20s on a year-on-year basis is what we're expecting from Nykaa.
If you like this video, then like, share and subscribe to ET Now.